This is an interesting move only because we talk about some of the impact that younger voters will have. Just how much of an impact will the economic narrative be across the entire demographic spectrum heading into this election in November?
It's going to be significant. I mean, the economy still remains first and foremost the number one issue for voters. What's really interesting, though, is normally you would say an incumbent that's coming in with an unemployment rate as low as the current unemployment rate should be an easy win for that incumbent. Historically, that's what we've seen anyway. This time around, it might be a bit trickier, though, because to the point that you brought up in that prior chart, inflation is a big issue. And so even though unemployment is really low, there's a lot of weakness in the consumer confidence. It's been starting to pick back up a little bit just as we've seen inflation coming down, but it's still not where you would expect it to be given the unemployment rate. And that means that there's still a lot of uncertainty and low confidence in the economy. Add to that, in a lot of the swing states, Trump actually polls better than Biden on the economy, and it means that it's going to be a really close race. And with a lot of time still left to go, it's really tough to tell who's going to win it here. But that will be the main issue, and we'll have to see how inflation and unemployment continue to develop over the course of the year.
Dan, there's been a lot of, storytelling in previous years and election cycles with regard to the steps that an administration can take to position itself or its party better going into an election. Is there anything that suggests right now that consumer sentiment, American consumer sentiment overall, is something that can be turned or shifted by either candidate to their benefit heading into November?
Well, of course, being able to better explain the positions that each party is going to take and has taken in the past. I mean, these are both actual incumbents in a sense, is one of the key things that can help. But really, it's going to come down to how the economy itself develops. And, at this point in time, given that we have a mixed Congress, so there wouldn't be a lot of fiscal likely to come through, it's really going to be down to how the economy develops on its own at this point.
All right. What's the playbook then? We talk about this idea that investors have to pay attention to this and many other parts of the cycle. What exactly does then one investor or trader do and express that view heading into November?
Yeah, so first we would say, the way that you typically see elections impact markets is in the 3 months prior. So right here, right now, it's probably a little bit too early to very directly play election themes. But in terms of asset classes, two things that we would note. One is this looks to be a very dollar positive election. And, in general, we think that a Biden administration would likely have a mixed Congress, and that would likely have a minimal impact on the dollar. The other side of that is if ex-President Trump wins again, and you see both Congress, House and Senate go Republican, you're likely to see a very dollar positive environment, both in terms of extension of tax cuts, but probably more importantly, in the forefront would be the potential for tariffs and an escalation in trade wars. We think that we could even see up to 5% higher in the dollar in those months leading into the election. The other thing to always remember with the election, too, though, is that because it's a known event, whatever election trades you put on going into the election, they typically work in that period before the election, not necessarily after the election. So even with something like the dollar, we could expect to see at least a temporary high actually around the election, regardless of the outcome, because it'll likely be very priced in. Also keep an eye on fixed income. This one's going to be very important, too, more so on what happens with Congress. Yields tend to go higher in a united government. And so if you see both Democrats, I should say either full Democrat or full Republican Congress, you should expect to see higher yields.